All right, good morning, everybody. Happy hump day. It's Wednesday. My colleague Brian calls it muffin day because I think he gets muffins delivered every day. So, that's a fun fact. Can you guys hear me okay? Awesome. Audio is good, right? Yep, awesome. Very good. Let's get started here. Good morning, everybody. Again, happy Wednesday. Serge Berger here from the SteadyTrader.com. This is our Set the Market morning call. If you're here for the first time, as always, please subscribe to the channel. It's totally free. You'll be updated in real time when we go live with our analysis, great podcasts, insights, and so on and so forth. Also, as always, please smash that thumbs up like button, and help us grow the channel here. So I want to start off with what I think is probably the most important chart, which I'll show you here in just a second. We will look at and then actually two really important charts and one very specific trade idea that I'd like to share with you as well. If you give me just one more minute, I just want to give people maybe like one more minute to before we get started, and then I think that'll be very helpful here. So give me just a second. We'll start here in just a minute. All right, cool. Let's get started. So again, thanks for being here. What I'd like to share with you here to start off with is two really important charts. And I think I'm not quite sure how many people are aware of like why assets are going higher. Specifically, long duration assets. That's basically, like tech stocks. But there's a very specific reason for that. Now, as much as tech stocks and long duration assets are going higher, I just want to remind people one more time here. This is the year-to-date chart of assets across different asset classes and stocks. And you look at the bottom right-hand corner, and as much as the NASDAQ 100 is up, almost 14%, led by, a couple Max 7s, it's still one of the worst performing assets year-to-date. Not bad, it's up nicely, right? But it's still absolutely stomped into the ground by things like gold, uranium, European stocks, silver, which is up again big today, okay? So, there is a trade here that I'd like to share with you in a few minutes on COPX, copper mining stocks, which unlike copper, which got completely smashed last week, which was not fun for me, I can tell you that. Luckily, I'm hedged in many ways. But copper mining stocks look really good, so we'll get to those in a minute. But first, two really, really important charts. And again, it's somewhat difficult for me to overstate the importance of these. Let's start off with one that I shown a few weeks ago, and I'd like to reiterate it. But then we're going to get to the really big one. So what you're looking at here, and I'll make this a weekly chart, is the share price of JP Morgan, okay? And if you look at the x-axis at the bottom, you will find that this chart actually goes back to, all the way back to, let's call it 2011, is when this uptrend in shares of JP Morgan started. And you can see the uptrend. I'm trying to finish it here by giving you the other sort of marks here. Here and here. Okay. So why is this chart important? You'll see in a second or in a minute why it's important. let me first talk about JP Morgan, why that company is important. JP Morgan, if you look at the history, if you want to do yourself a favor and read, if you're a student of the markets, a true student of the market, not someone that chart chases because it's now on vague to use your app and trade 5-minute, 2-second charts. If you're a true student of the market, do yourself a favor and take some time, whenever it's going to take some time, and read a book called The House of Morgan. I think that's what it's called. Let me quickly find that here. It's called The House of Morgan, and you can here. I'm going to bring it over for you. So I read it twice. When you work at JP Morgan, they give you this book to read. It's like a mandatory, or at least it was for the managing director I was working for. And it'll explain to you the history of JP Morgan, first of all, of the person JP Morgan, his family, his brothers, and then of course the company. JP Morgan is probably, one of the world's sort of historically, over the duration of its existence, most important banks in the world and globally. JP Morgan has an incredible insight into not just the US economy, but also the global economy. And so when I find that stock right back up at its very upper end, also, by the way, Jamie Dimon, my former boss, he publicly said that he's not buying back his own stock at these levels. He said this a few months ago, I think. The stock is at the upper end of its channel of a 14-year channel. Now, you might say, Serge, I don't care, it might go higher. Here is why you should care about this, okay? I'm going to overlay the S&P 500 for you on this, and you'll see it's the same damn chart. Okay, now, the reason why I believe JP Morgan chart here much more than I do the S&P is because the S&P is distorted by a few tech stocks, largely NVIDIA, right? I cannot take that serious. To me, it's no longer a serious index. It's an index basically run by a lot of algos and basically focused on 3-4 major AI stocks, right? That's not an index. That's a concentrated market bet. So if you believe that JP Morgan is an important company, has good global insight, as at least I do, and again, if you haven't read it yet, read The House of Morgan. I'm going to type it in here. Reading homework. It's a big ass book. It's a freaking Bible. Like, it's really thick. I'm just typing it in here. Okay, go ahead and read that. I think it's going to do a lot of good for everyone to understand why that company is so important. So the S&P is the same chart. So if JP Morgan's getting to this 14-year up on a channel, struggling here, doesn't mean the stock has to fall apart. Doesn't mean the S&P has to fall apart. But chasing it up here is probably a lower reward to risk thing. Now, the second thing I'd like to show you, and this is the really, really important chart. Second important chart is one I just created. I don't know where the hell it went. It's amazing. I literally just created. Oh, here. Okay. All right. So this is I'm going to make it a line chart. This here is the NASDAQ 100. Okay. And you guys remember this was April, right? And then, of course, we've had a big rally right back up. Okay. Now you might say, well, that's because America is amazing, and it is, right? But that's not, that, as you'll see in a minute, that's not the reason why stocks are up. Stocks are up because of this. Okay. This red line is your good old US dollar. Okay. And the dollar is getting completely pounded. Now, some of that is, orchestrated and wanted by the administration, but I'm telling you, people are losing purchasing power, and to preserve purchasing power, they're buying not only hard assets, but they're also buying these mega cap tech stocks. The problem is the mega cap tech stocks are one headline away from having a 30% clip, right? And that would be normal. That wouldn't be bad. That wouldn't be the end of a long-term story. It just, there's volatility there. So I'd like to leave this chart here for a minute and see if anyone has any questions, if anyone cares. Maybe you guys don't even care about this stuff. That would be fine. But I thought a lot about this over the past couple of weeks, whether I should even show this chart, because I know a lot of people just don't care. They just like it when their stocks go up. But if anyone has any questions or thoughts, give me some feedback. I'd love to hear if this makes sense to you, right? Now, of course, the trouble is if the dollar starts to rally for some reason very strongly, if, that's a big if, then of course you could imagine what happened to that blue line, which is the NASDAQ 100, which probably would go down, okay? So this is it's a pretty critical thing to understand. Again, it's possible no one really cares about this here, but I think it's critically important to at least be aware of. So please understand this. I've been thinking about it for the past few weeks. If I even show you, because I know a lot of people just don't care. Yeah, that's kind of what I'd like to share with you here today. It's, and in this case, it's really not even about the size of the divergence, Nicholas. It's just, to me, it's more about making people understand why are stocks up. It's not because Tom Lee tells you every single day that there's too much cash on the sideline. It's such bullshit. The cash on the sideline is a result of the U.S. running a 7% deficit, and that naturally puts more cash in people's pockets because assets go up, right? That is, you can flush that analysis. It's because of this, right? So, so that's important. So, for every dollar that people made buying stocks this year, they lost equally amount in their purchasing power with the dollar. Right? Now, if you're a foreign investor, let's say you're a large pension fund and you own NVIDIA, it's nice to know that the stock is up. The problem is the dollar is getting clubbed, right? So you might not even be up. So again, before you go out there and buy your next YOLO call and Bozo stock XYZ, be aware of ultimately what really matters. So this is so fucking important. Excuse the language, but it pisses me off to no end when people don't even want to take the time to understand this kind of stuff. So take a screenshot of this chart if you care. Take a screenshot of the JP Morgan chart. These are such critical things to understand. Now, this morning, just to drive this home even more, let me show you what's going on this morning. I'm going to try to show it to you a bit more closely here. So give me just 1 second. Let me quickly go and show it to you like this. So here we have, I'll just make a new chart to show you this in another way, and then we'll get to something important. Okay, so here is let's take the NASDAQ futures this morning, and then we'll take John, I'm going to post the charts in Trade Ops, of course. Yep, I already mentioned it in Trade Ops that I will post it there. So yes, of course I will. Absolutely. Trade Ops as a member, of course, you will certainly get that. Now the other thing I want to add is okay, here. So here's what's happening today. Okay, so you can see now the dollar is bouncing a little bit here for the past 3 hours, but it's still down. So the red line is down, and guess what? Because the red line is down, the dollar's down, the blue line is up. That's the NASDAQ 100, right? So this is just today. So that's today, and of course this here is basically since April. So since the stock market crash was saved, you can see that the dollar started to re-accelerate going down. Okay? So I think that's really important. I think interest rates are only a small part of the story here right now, Steve, in my view. I don't think it's that important. I think what's more important is what and the machines are driving a lot of this, right? A lot of the machines, the macro machines at macro funds, are programmed to buy long duration assets when the dollar falls. So this morning, it's nice to know that the NASDAQ futures are up another 40 basis points, but just realize that the dollar is down, right? So you're probably not even making money in terms of purchasing power. All you're doing is preserving your money, like not you specifically here, but just in general. right? So that's that. Now let's go back to this this story. How can we preserve our wealth? What tends to hold up best, and the long duration assets like Nvidia, those are good companies, but just know that they will at some point the amount of AI build out is going to have to be able to actually happen in terms of energy demand. I saw another statistic this morning about energy demand. So I'd like to show you what's going on. I basically got I guess trumped is the best way of putting it on my latest copper position about a week ago when they said, oh, never mind about the copper tariffs, and copper just dropped like an absolute rock. However, while copper hasn't really recovered, the long-term bullish story for copper is still incredibly, very much there, right? So this is the long-term bullish story of copper. We can go back even further, but I think this long-term story hasn't changed. And even better, and I'm going to give you a trade here, copper mining stocks, okay? We just this morning received a new buy signal in copper mining stocks using our trender momentum indicator. So, and I'm going to get that out here in a minute. So this is our trender momentum indicator right there. You can see copper mining stocks. We just got a new buy signal this morning. And here is the absolute chart. So it's COPX. I'm going to make this a candlestick chart so you guys can see this a little bit better. So this here is COPX, or copper mining stocks, as an ETF. You can go check out the holdings of this ETF. Just type in COPX ETF holdings into the Google machine. But this is your sort of multi-quarter chart, and I think copper mining stocks are coiling up. I don't know, if they're going to rally, 20% right away, but I think this is something that I would encourage everyone to be very much aware of, copper mining stocks. And by the way, I should mention this as well. So we are getting a momentum buy signal here this morning. So for all of you guys using the trender, and if you don't have the trender yet, I'll give you the link where you can go get it. But now on our trender momentum indicator, we're getting a new momentum buy signal this morning, right there. And that's also potentially a major breakout, which, by the way, silver is having another up morning this morning. But again, that's because the dollar is down, right? So then we come back to that chart that we started off with today and that I've been showing all year. And again, sadly, very few people seem to care. Look what's leading this year. Look what's leading. Uranium stocks, uranium ETFs, platinum, European stocks, silver, Bitcoin, gold, Chinese stocks, copper mining stocks are up 22%. They could easily be up double by the year's over, by the time the year's over. Copper itself, again, I said, just got trumped a bit last week or the week before. I think it was last week, or the week before, actually, on the back of that tariff news, back and forth, pain in the ass. But these things are leading, right? They're leading because they're long duration assets, hard assets that do well when the dollar is down, right? So that's really the whole story here today. And so I'm hoping this makes sense. I wanted to give you a bit more of a bigger picture view today, alongside with a short-term idea here for COPX. If you guys have questions, let me know. I'm going to quickly take a second here and recalibrate. Quantum, sure. So Quantum is an ETF that has quantum computing stocks. So instead of guessing, what we like to do is we like to follow momentum for something like this. So this question comes from Win. So when we have our momentum indicator is called the trender, and you can see we received a buy signal back in April, and that ultimately led to a rally of about 26%. Then we had a small sell signal, and we're now getting a new buy signal. This one actually has to be adjusted with this. Okay, so this here is now our new buy signal in quantum computing stocks, and I would say the profit target is probably around $100 if momentum sustains. Right, it still has a little bit to overcome, but that's the momentum setup here that I see taking place. If you don't have the trender yet, you can get the install version that you can use on TradingView. I'm going to quickly give you a link for that if you'd like. For those people that don't have it yet, you can get the here. Let me bring this over. If you don't have the trend or momentum indicator yet, you can go grab it. It can be used on TradingView, on Thinkorswim, on Metastock and NinjaTrader. And you can go grab it on this link here. The link is thesteadytrader.com/trender. It's right at the bottom of the screen. It's just $397 for a full year. So if you want to go grab the trend or momentum indicator that you can install on one of your, TradingView or Thinkorswim, whatever, you can go grab it there. It's just $397. So just wanted to show you this for those people who are asking. So it's www.thesteadytrader.com/trender. Let me type that in here. And then are there any more questions? So that's... There you go. That's the link for that. thesteadytrader.com/trender. It's just $397 for the full year. Cool. Excellent. All right. Nicholas is asking, how do you decide whether to buy stocks or options for something like quantum? Well, that's really up to you. It's a good question. So to me, what's more important, Nicholas, is that I get a signal, right? So you can see this morning we're getting a buy signal with our momentum indicator. If you have enough capital and you like to buy the stock, you want to buy 100 shares at $94, right? That's, for a lot of people, a lot of money. It's almost 10 grand, right? Or you can just buy a call spread or call option. It's really up to you, right? Like that, it's difficult to say whether you should buy the stock or the options. A lot of people like to do options because they like the lever. That's a tough one because everyone's got their own style. It just depends on what you like to do, quite frankly. What's way more important, Nicholas, is in my view, is that you have a process to actually find signals, right? Most people don't have that. Most people basically randomly tap around the market and then they find a way to put on whatever trade they want to do, right? That's the difference, I think, between winning market participants and losing ones, is that we have a repeatable process and that also allows us to adjust, right? To adjust to market conditions. So anyway, cool. Well, listen, I hope you guys enjoyed those two charts. If you are a TradeOps member, I'm going to send it over there as well in a minute. And again, if you don't have the trender momentum indicator yet, you can go grab it at thesteadytrader.com/trender. By the way, what it does, someone was asking earlier, as soon as we get a buy signal, we also get a profit target. And it can be sent to us with an email alert or a text alert. That's all entirely possible. So just for those of you guys who don't have the trender yet, we'll talk much more about it to make sure everyone understands how to use something like this in your process. So thanks for being here, folks. Have a great day, and we'll see you guys over in TradeOps in a few minutes.